Okay, let's unpack this. Today, we're diving deep into, well, a really fascinating question, one that gets debated a lot. Why can't the Federal Reserve directly hold Bitcoin? And why, instead, is it leaning on these Bitcoin ETFs? Is it just, regulations? Or is there maybe something more strategic going on, like a plan to keep the dollar on top? We're looking at a real tension here. On one side, you hear about political figures, maybe like Trump, wanting to leverage Bitcoin against the dollar. And on the other, you have institutions, think the Fed, BlackRock, kind of trying to channel Bitcoin's power through things like ETFs.
Exactly. And to really get it, we need to sort of connect the dots. You've got financial power, historical patterns, this new tech. It all shapes how we even think about value. We'll explore who really benefits from this setup and what it actually means for the dollar's future. And maybe most importantly, what it means for you trying to navigate all this.
Right. So let's start with this apparent contradiction of the Fed's Bitcoin issue. I mean, the U.S. government does hold Bitcoin, right? Something like 200,000 BTC from seizures, but none of that shows up on the Fed's official book. So what's really going on there?
Yeah, that's key. The core reason, well, it's pretty fundamental. If the Fed publicly announced, hey, we're holding Bitcoin, that would instantly signal, or could be seen as signaling, a lack of confidence in its own currency. It basically implies weakness in the dollar. And that's a huge red flag for global central banks, for institutional investors, everyone who relies on the dollar being, well, infallible. Central banks just don't do that, historically speaking. They protect their currency's reserve status fiercely. Think back to 1971, ending the gold standard. It's about preventing any doubt, any erosion of that global trust.
Okay, that makes a lot of sense from their perspective, protecting the dollar's image.
Mm-hmm.
And this ties into another point, Bitcoin's fixed supply. That's scarcity.
Yeah.
How does that clash with what a central bank needs to do?
That's absolutely critical. A central bank's main job involves having flexibility, right? Adjusting the money supply to fight inflation, boost growth, handle recessions. Bitcoin, its supply is fixed. That completely ties their hands, takes away a vital policy tool. And if you look at it through like a behavioral economics lens, things that are scarce and uncontrollable, they inherently feel like a threat to centralized power because you lose that monetary flexibility. So this push we're seeing for indirect control through ETFs, and maybe down the line, even CBDCs, those central bank digital currencies, which, just to clarify, are basically digital dollars the Fed would control completely. It's all a countermove to Bitcoin's whole decentralized idea.
So controlling new forms of wealth isn't exactly a new strategy then.
Mm-hmm.
But is Bitcoin just, another asset they can sort of absorb? Or does its digital decentralized nature make it different, a bigger challenge?
That's a really good question. Bitcoin's digital nature does add layers of complexity, no doubt, but the underlying principle, institutional absorption, that's still there. If we connect this to the bigger picture, think way back. Ancient Rome controlled wealth mostly through taxes, not by hoarding every single coin. Or look at gold ETFs today. They trade way, way more volume than actual physical gold. And that helps limit wild price swings, keeps gold somewhat tethered to the financial system. Bitcoin ETFs, well, they function similarly. They act as control mechanisms. They absorb demand, yes, but they also financialize Bitcoin. They pull it into the traditional market structure. This lets the big players influence its trading, its liquidity, even how people perceive it. They manage its growth, kind of keeping it from truly breaking free from the existing system. So yeah, it's a strategic play in that larger tension. I mentioned Bitcoin as a disruptor versus Bitcoin as something managed within the dollar world.
Right. It reminds me of that story, maybe you heard it, about investor A, big Bitcoin supporter, apparently spent millions on a fancy crypto dinner with a certain ex-president. The hope was, a full-throated endorsement, sending prices to the moon. But then almost right after, the spot ETF news starts coming out, and that huge rally, it sort of stalled, didn't it? Stabilized. Makes you wonder, okay, so the institutions just stepped in and put a lid on it again.
That's exactly the feeling many people have. And honestly, understanding these patterns, this history, it's almost like mental care for investors. When you recognize the playbook, it gives you an edge. You're less likely to get frustrated. You can sort of anticipate these moves instead of being blindsided. Awareness is key.
So this all brings up a really important question for you listening. How do you see Bitcoin's future panning out? Is it genuinely going to be free, decentralized money? Or is it heading towards being just another regulated asset, maybe another link in a chain controlled by traditional finance?
It makes you think about that old idea, the Tower of Babel fell because power got too centralized. Is Bitcoin that crack appearing in the dollar's tower? Or is it just getting absorbed, becoming part of the structure? What's the next sign we should really be watching for? Maybe how deep these CBDCs go. Or perhaps if some new, truly decentralized tech emerges.
Lots to think about. Keep exploring, keep asking those questions, and keep digging for the truth with us.